Hello, Warriors. How's everyone doing? Thank you, Simon. Bruno, welcome to F.A.C.E. Are you new here? Hello, Mike, Andrew, AJ, James. How are you doing? So we're in the middle of time change confusion. Barry, how's it going with you? So I was thinking about this. As traders, we're like boxers. I tweeted this. We're patient as we wait for openings. We block punches, which is our risk management. We take swings to score points, and occasionally the knockout will score a knockout. But you can't expect to be in the ring without getting hit and still being able to go the distance. So that's my boxer analogy to trading. So let's talk about scoring points and taking hits. Anyway, good morning. Good morning, everyone.
Morning, Dale.
Hey, hi. How are you today?
All good, mate. You?
Hanging.
Hanging,
So
hanging in.
you guys know I've been talking about Microsoft.
Yeah.
Thought that, back here we might get some kind of head and shoulders formation, how you came in. But it's developing into a descending triangle, similar to not as large of a formation as we had in Apple, this descending triangle. So Microsoft, the breakdown is going to be a shade under 400. The range is about, call it 25 or so. So it could take it back down to maybe 375, which isn't really the end of the world. Could just be viewed as another great buying opportunity when you look at the daily. If you could buy it down here. So I do expect it to break down. Everyone was cheering that even though Nvidia got clobbered on Friday, that's a pretty ugly candle, and that the market really didn't fall apart, and that there was good rotation to support the market, even though it was still lower. But my contention is the market's not going to be able to hold up if Nvidia continues this correction. And again, the lesson is, short markets that were not making new highs while the market was getting parabolic. So this is another candidate to trade for a correction to the downside. And as far as currencies,
Can I
FX
ask you,
is, yeah,
can I
go
ask you
ahead,
a quick
buddy.
question on the video because we're having that discussion in our chat room. That move Friday, would you consider that a blow off top type move or just a bit of overextension?
Well, that's something you only can really determine in a rearview mirror,
Yeah.
right, over time. And tops are always like it. Is it a top or the top? How do
Yeah.
you know until time passes? And, you see what the next rally looks like. I'd say it's enough to put a damper on it for a while. Maybe pull back to, just take the range and pull back to, 750. I wouldn't be buying the first, down day in Nvidia after this kind of a move.
Yeah.
And again, it may be a better payoff than Microsoft, but I'd still rather um, sell the weak sister than the leader. Okay.
Yeah.
But you never know if it's the final high. I mean, look, there are higher targets for S&Ps, even if we pull back to, you know, uh, as deep as 4,800. 4,800 is going to be the line in the sand. That was the breakout, right?
Yeah.
So, I mean, that's still 300 handles from here. And, until that happens, you can't declare a top in anything, I guess. Um, but I think we're in a corrective mode. Part of it, I think, could be FX. So if you took seriously selling the close in Dixie under 103.80, which in the US that close was 103.78, you have 100 pips. And I talked to Schwager a couple of weeks ago, and Jack said that if you're not taking partial profits on your trades, you're assuming you're 100% right, which is not a great assumption to make. So, you know, you had at least 100 pips on that one, and you should be booking them. And even though I think there could be a correction, I'm not going to get long. I want to see what happens, and you should have BE stops now. We get back over 103.80. You know, this was a break to buy for another big move to the upside, and we don't know that until it happens. So your position is, again, partial profits, and you know, we could get a rally back to 3.5 if we get a hot CPI. A lot of these things look like we could be in retrace mode. I think we're going to get a retrace in silver back to about 23.20. It's a question of when. Are we going to make a new high? Silver was weaker than gold all last week, as expressed by the gold-silver ratio, which, you know, rallied again. And I think we're going to threaten this high, these highs here in the gold-silver ratio, which means that silver's your preferred short, where gold made new all-time highs. Silver didn't even get back to the same level gold was at, that it's already taken out. So silver, you know, is a weak sister between the two. I will say this, though. This is significant, and Peter Goodburn talked about it, that platinum and palladium would be the leaders in the precious metals, and we talked about the gold-silver ratio being an opportunity where you're long platinum, short gold, and just in one day, the spread's picking up 16 bucks. It could just be beginning. So, you know, I need some guidance in currencies here, Ryan. You know, you don't get every week the kind of setups you had last week, right? I mean, that was important. It couldn't close under, you know, we couldn't get over 109 in euro. We couldn't get under 103.80 in the Dixie. But once that happened, the picture changed. What are you thinking here as far as euro? I assume it's done nothing really wrong, that you're still long.
Yeah, no, exactly that. It's doing what it needs to do. It's holding the break at the moment. We've had one test down towards that, you know, 1900 level, or 109 area, should I say, 109.17 area. We had one little test, it held. So it's doing what it needs to do technically, holding the breaks. Now it just needs to knock out that high and maybe put in a challenge on 110. You know, it's still looking fairly well bid, even while the ECB members are all coming around. It's pretty much nailed on for a June cut now, the way they've been speaking. So the market's happy with that, because obviously it's not sold off the euro on the back of that, well, versus the dollar anyway. So the market's happy that June we're going to get a cut. The risk now is that whether the data confirms the cut or not. You know, if inflation is more sticky, if some of the other metrics tick up, like wages that they're going to be looking at. The big price risk now is if something comes along that doesn't conform to their thinking, then you're going to get the price change. But yeah, the Fed's always the bigger game in town, and hence why weakness in the dollar is going to outweigh what's happening with the ECB. So yeah, this is showing no signs. It's a bit like the S&P and that break of 48, showing no signs of stopping at the moment.
Right. Okay.
It hasn't all year. So yeah, you go with the trend until it starts busting back down through the support levels.
You know, I kind of at times want to put myself in the mind of a retail guy, which isn't difficult because that's what I am. Anyway,
exactly.
You know,
but you know, how many people were waiting to smack it if it ever got to 109?
Yeah.
You know, when it was trading 107, 108, everyone was queuing up to select 109. And then this is when the market makes a fool out of you, because you go,
Yeah.
all right, I'm going to sell at 109, and next minute it's trading 109.70, and you're thinking, well, what the fuck's happened now? Excuse
Well,
my
I'm thinking
language.
the retail guy is going to look at this move up here towards, you know, a bit over 110 as a right shoulder of a head and shoulders formation, which it isn't, because it's not happening from down here. It's happening after an advance, but people are going to
Yeah,
start looking left and go, oh, you know, this was an important level. Maybe it's a head and shoulders top, with this being the neckline. That it's not. So
yeah,
I think the Bears will give it a shot up there as well.
yeah. 110 will be the new 109, and it is a significant old level. You know, you
Yeah,
look at the far left of your screen, you can see there. You know, it's had action there. So
yeah,
yeah, it's a big enough historical level. Something will happen there. But if you're going to short there, then make sure you don't need a big wide stop. You don't need to stop at 111. You know, 110.30. That's where you're wrong, sort of thing. You know, you don't
yeah.
need to throw the palm at it.
Tip of the hat to you, Ryan, on your video that you did on Trader Summit about getting short US dollar yen before it fell apart.
Yeah, thanks,
And
mate. Mate.
yeah, I was looking at
Good
this 200.
idea.
Yeah,
I wish I
yeah,
got
it
on
was
it.
okay. Yeah, sometimes we make calls and we don't do it. That's because sometimes we're overcommitted or we're just committed, and um, sometimes even though we are professional boxers, we have enough exposure, enough punches coming at us that we don't need another. But it's getting pretty overdone here. Uh, Maybe we hold this 200-day, comes in at 46.20 or so, and shorter term, you know, look like at a 30-minute, you know, looks like we're starting to, we may get some divergence down here, and this would be the zone on a rally, just like I'd be a seller of the dollar up around, you know, 103.30 to 50. The end with much more pronounced weakness up here at 8.5 might be a nice
Yeah,
sell zone. What do you
yeah.
think?
There's two-way risk for the yen today. For one thing, volatility is higher. We're well over 9% in the vols, the 1 month vols. So
Okay.
you've got to take that into consideration. You know, last week's 20 pip moves, this week's 40 pip moves. And we've got so much stuff coming up on Wednesday and Friday to do with wages in Japan and decisions for the Bank of Japan. You know, it's one of those situations. If the news is good, we could be at 145. If the news is bad, we could be at 150 again. It's
Yeah,
one of those moments.
yeah, and this is important news, right? That the BOJ
Um,
refrained from ETF buying.
No, you know what? It's being made into news. This is one of those times.
Okay.
Okay, everyone's looking at Japan, so any little headline, people like Bloomberg pick it up and Stokes policy move speculation. Okay, they were net sellers of stocks in 2023. Okay,
Uh,
so I don't think they've bought ETFs all year, and their unwritten rule is that they came in to buy stocks if the Topex fell by 2% or more by lunchtime. You know, Topics had a big move south Friday and today, and they didn't come in. Well, why didn't they come in? Because it's been rip roaring for the last 6 months, so they don't need to support it. So it's not
okay.
such a big headline as some in the press like to make out. But the reason they're not doing it is because markets are going their way and data's going their way, and so they're potentially going to be ending easing.
Okay. S&Ps have a chance for a reversal week, 2 week reversal wouldn't take much, and um, looks like we could challenge Blake's line in the sand at 50.5 this week. Um, Also, a pretty good gap in VIX this morning, 1586. So I think we're going back to that 18 level that we came off of. You know, that again, the VIX kind of proved itself, even though it came off that, you know, we made new all-time highs, and yet the VIX held and put in a higher low once again. So there's some messages there for at least a correction. And then I want to go to thanks for your input today, Ryan.
Thanks,
I
mate.
want to go
Always a
go
pleasure.
to Mr. Kman.
Hey
How are you?
Dale, hey everybody.
Hey, buddy. So the 10-year um, trading down here, I kind
Yeah.
of I kind of think that we might get some type of retrace here. I think this might be the week of retraces,
Hmm.
and that maybe we bounce back up towards this, 417 to 420 level, which was
Um,
kind of the breakdown here.
yeah, inflation tomorrow. The tomorrow inflation data will show the way for those US yields. It's the next big thing, especially after last month. Those shelter prices have I wouldn't say distorted, but helped inflation to be a lot stickier than what was expected. And some people in the market thinking it was a one-off. So perhaps the market is going into tomorrow's number thinking that we are going to see a bit of a setback on inflation.
Okay.
The core is expected to come down to 3.7. The headline CPI is expected to stay sticky around 3.1, but yeah, the core will be one to watch. And then I think towards the end of the week, we are going to have the PCE as well, right?
Yeah.
So there's going to be two data points to watch, and those will probably be the deciders on those yields. Since both the Fed and the ECB are sending us to June for decision time, only data can now force them to rethink, right? So and they will have the market rethinking as well. So if we get a weaker data tomorrow, I wouldn't be surprised if the force test 4% or even dip below. Now you get a sticky one, it's probably going to rebound. Even holding the sticky print of last month may be enough for a bit of a rebound on the yields.
Yeah, I didn't do the fibs on this, but I would bet we're near some fib off this move. And,
Mm,
I guess interest rate bulls are looking for,
yeah,
there are people out there looking for
yeah.
new highs and yields by the end of the year.
Mm,
To me, 420 would negate this and make it look like, we have some pretty good we have 40-50. I mean, in the S&Ps, we have 50-50.
mm,
Dollar, we have 103.80. We have yields, we have 420. So we have some like key levels that will tell us if they get there that we're going to have a continuation or a reversal.
mm.
So, it's good to write those numbers down or, you know, uh, at least keep them in mind. Best way to keep something in mind is to write it down. Um,
Absolutely.
yeah, so, that's something to consider. Um, what do you make out of, gold making new all-time highs and silver lagging? Not today, but
Because well, first of all, the size of the market, gold is much bigger than
okay.
silver, and perhaps silver is maybe a little bit more of a because it's an industrial currency, yeah, an industrial asset.
Yeah,
It probably gonna need more. As I always say, I mean, silver to outperform gold, I think should have a pretty decent economic background, and perhaps the market is just lagging clear direction for now. So, and gold, as we know, has also been bought quite heavily once the Chinese came back online. So there's a lot more central bank involvement there and asset manager involvement in gold, and I think that's the biggest explanation between silver lagging. But if you for instance have I don't know something happening on the EV sector that those see a revival, let's say, or a decline, you will have an impact on silver. Um, but yeah, I think the explanation is just because there's so much more people trading gold than silver, really.
okay. And silver would most likely be more vulnerable to risk off
Yeah.
than
Oh yeah.
gold,
Uh,
right?
uh,
So, we get this correction in S&Ps, silver probably is
Continues to
weaker than gold.
underperform gold.
Yeah.
Mm.
Okay. Is the general around?
No, no, no. We are
Oh, he's
just
on
as
Yeah,
we
he's
have
vacation.
in Mexico. Yeah, well, we're all working hard. He's drinking pina coladas, Dale. Disgraceful behaviour.
Where'd he go to in Mexico?
Mexico. I don't know.
no, I don't
Oh,
know.
okay.
Um,
All right. I
probably a
saw the
prospect.
pictures. I thought it might be San Diego, but
Mm.
all right. So he's in Mexico. So all right, we have about 10 minutes
Yeah,
before Anas El Haji is here. Um, what do you think about, you know, energy? The rallies keep fading.
yeah.
You know,
Keep
look,
keep getting faded. It looks like gold is gold. Sorry, oil is trading. How should I say? It's $10, $10 at the time, somewhere on the top side at least. You see, like we had this 90 was capping a couple of times. Now it's
yeah.
$80. It looks that they are like respecting those psychological levels, and but we keep rejecting the $80 despite what OPEC and OPEC Plus is doing, trying to manage the output and the cuts and stuff. It does look like 80 is your gateway or cap ceiling for now. Yeah, and then it's just a range, but it may remain a bit volatile. And I was just thinking about, China. We've had a bit higher than expected CPI coming out, but that's not the main reason why I'm saying that. We're coming out of that week-long Chinese Communist Party meetings, and although details are still scarce, they seem to be wanting to do something about finally the economy throwing a lot of money, and we know that investors have gone out of it massively. And I'm just starting to wonder whether they are we are somewhere not too far away from the trough in China. I know geopoliticals are not great, but then the Germans have also said that they can't really completely do without China. So I'm starting to wonder if we are not like getting a bit closer to the bottom in all things Chinese.
I'd like to see a nice sell-off in risk here in the U.S.
Hmm.
And if China holds up during that, that would be a pretty good tell.
Yeah.
So the only thing that bothers me about this is the RSI reading at the lows was
Hmm.
it was under 30. It had a little divergence, but maybe we get one more flush in
Yeah.
China too. But I agree with you.
But and
Most people are out.
it's not the case of wanting to get back, but it's also the case of like when and we saw. I'm going to compare it with they're both not completely comparable, but I'm going to compare it what happened in the S&P when we were back in the 4100, and then we started to rally. And then all of a sudden, the people wake up and say like, well, we are underinvested compared to our models, compared to asset managers saying like, well, we are underinvested, and then they all of a sudden need to pile in again. And I'm not saying it's going to happen, but it's starting to feel a little bit like this for me. That you can only get out of a country until you have nothing left, right?
Yeah.
For those investors, I'm not speaking about speculators, short and things, just about the real investors who completely left or at least scaled down to the absolute bare minimum. And if we are starting to see those little signs here and there that they may have bottomed over there, there may be a bit of a rush back into China, at least from the investor side. And I'm keeping a close eye on it.
Yeah. A big move down in the Nikkei.
Yeah, yeah, but you know what? They didn't buy any ETFs. They haven't been buying, as Ryan said, they haven't been buying an ETF since for over a year. In Japan, they don't need to. We've rallied. I mean, what is it? 30, 40, 50% in the topics. I mean, they don't need to get in there right now. No, I think this is what we saw there on the Nikkei. We saw this higher high on where was it, on Thursday, Friday, and then I think the market is just getting ahead of this big week for wages, ahead of next week Bank of Japan. People just taking some chips off the table. That's what we are seeing now. And again, if you compare it to China, there's been a big move out of China and into Japan. And if China hits the bottom, we may see some profit taking in Japan and people getting back into China, you know.
Okay. Either you, Kman, or Ryan, can you take the screen for a little while? I'm going to look for our guest, Anas El
Yeah.
Haji.
Do you
Okay,
want me to
so
grab
here's,
it, or?
yeah, go ahead. And
Yeah.
take
Okay,
see your
give me
charts
2
with your black background.
seconds. Yeah, give me 2
I
seconds.
used to use a black background,
Yeah.
but that's when I was, you know, a goth. I'm kidding. I was never a goth.
I never had the hair for it. Yeah, I mean, there's a couple of things we need to look at. Obviously, stocks are in focus at the moment. You know, looking at indices, what's going on in Nvidia, S&P. You know, we had that another sort of, I'm going to call it an overextension. This move up here that took us up near that 52 level. We're breaking down a bit now. This 51 level is potentially the important one here. That's gonna, if we break back under there, that should put us on course for a move down to this big support down at 50.50. But what it also may do is may just solidify this level again, 51.50s. So, you know, we always talk about shorts wanting to pile in. Everyone wants to pick a top or whatever. You need to see the support breaking before you get confidence that you can short this. So it's all right nudging against some of these levels, but you've got to keep trades fairly tight until we get under this area here. You can't say that this is any sort of long-term short. So you don't get caught being short in the middle somewhere like here when we're not going to break down to some of these support levels. You've got to think about where you want to place it. If you get a move up, as I say, we get back up to 51.50s. If we hold there, then that's, you know, one top. We've had support there. Then we've had resistance after this breakdown. That's an area you want to look at. Hold there, you get more confidence that the top's in play, and then maybe get moved down. Or else you look for a break. If you get a break of, you know, 50.40, that's when you maybe look at shorts, because now the market's telling you, right, we're not holding up here. We're heading back down. So I think this one's going to be an important one in the early part of this week, based on what we got last week. You know, all-time highs, Nvidia, all the blow up, and now this morning things are looking a little bit weaker.
Okay, so let's see some more charts from you while I'm Forex guest hunter.
Forex guest while you're still hunting. We looked at some of the metals as well. So, you know, another quick look at gold. You know, similar territory. You know, we're up here blowing, you know, hitting that high again up near a big figure. So you've always got to take that into consideration. 2200. It's going to be potentially big. I've not got many lines on this because I'm waiting to see where the price is going to hold up. But you know, 2175. It tells you exactly where support is at the moment. If we break down there, let's get some lines on it just to visualize it for everyone. So we're looking at that initially. Then round about there, we're going to look 2160. So, you know, this is the exercise all traders should be doing. You know, when you get these moves, you haven't got historical price action to rely on. You can't look left and pick old highs and old trend lines and whatever. So you've got to do the work manually, and you've got to find where the market wants to show you where its support and resistance is. So here, you know, first level, you've got to get back under 75s, then you've got to get back under sort of 60s, and all these little points until you get to the big level, you know, which is around 2075, and then that spike high that we had, which I still don't trust it. You know, this level here, I didn't trust that level first of all, but look at the price action on the evidence. You know, where did we hit and where did we stop? Right on that move up, we stopped just below it, and then we had the next day we're above, next day we're holding it. So I didn't trust it first time around, but I'm sure I'm going to trust it second time around. because the price action has shown me that's where it's going to be a level. So the evidence again is there. So again, watch the highs, watch your support areas. If you break below there, then we're heading south. But until then, you've got to think that if we're not busting below 75, then we're maybe going to challenge that high again, and off we go. And I think that's run you right into time there, Dale.
Okay. And just a
Have you
quick
got,
comment. Just a quick
yeah.
comment on USD ZAR. One of our
Yeah.
attendees is asking
Yeah. Kay, do you want to grab that quickly?
about the big
Well,
triangle.
just put the
I'll put it
picture
on.
of the dollar, and I know what Chuck is hinting at. It's if you look at it, it's around 1850, I would say. The bottom end for me at least. That's the one that started in May 2023, Chuck, right?
Yeah.
It's coming in around 1850. There's going to be really interesting levels down there, 1850 all the way down to 18 and a quarter, I reckon. So that's a big zone to me down there. But we had a bit of a strange open last night above 1880. Not sure why. Perhaps ANC also related, but it quickly came back down. So I think also tomorrow this is one in which is going to be a mover on the US CPI. If the US CPI comes in a lot stickier than expected, this one could see a bit of a bottom and start to move higher again. And
Any risk of default in
default,
South
well,
Africa?
there's always a risk over there, but then they've got
Can't
some
trade it.
Chinese shoulders under them as well over there. So I don't
Okay.
know whether default
Well,
is really at the order of the day.
okay. Just some alarmists talking about it. Okay. Thank you, guys. Was fun just being the Three Musketeers with you guys. So,
There we go,
Have a
mate.
good
Well,
interview.
I think
all
Stell's
right.
going to be with us tomorrow. He got mucked up by the clock change time, so yeah, he'll be on tomorrow as well. But yeah,
Who's
have a
that?
great interview, Dale, and
Thank you, Ryan. Who's going to
everyone
be
else
with
will
us
see you all
tomorrow?
tomorrow.
Who?
Sorry,
Who's going to be with us tomorrow?
Stell's going to be with us.
Oh, God, it's been a long time. Okay.
Yeah.
Cool. All right. Well, thank you, my trading warrior brothers. Thanks, Kman. Thank
Thanks,
you,
mate.
Ryan.
Cheers, bro.